Good afternoon, everyone. Thank you for joining us for our afternoon presentation of the Payroll Pitfalls by Gravita. So just to introduce myself first, my name's Mark Taylor, and I am the head of payroll here at Gravita. A bit of background about myself. I've worked in the payroll and pensions field for roughly 14 years, first working in a large house company payroll, mainly working on pension returns and final salary pensions, defined benefits. Then I moved into the payroll bureau background for the last 10 years. So I've had quite a bit of experience working in both sides of the market. And I really enjoy mainly pension side of payroll, and also the client interaction and helping clients navigate through the difficult world of payroll that it is now. And I'm also joined by my colleague, Rebecca Aimey, who is the Associate Director of Payroll here at Gravita. So Rebecca will just introduce herself.
Hi, so my name's Rebecca Aimey. I am the Associate Payroll Director here at Gravita. I have been in payroll for around 18 years now, 10 of which I've spent at Gravita. I would say my real passion for payroll kind of lies in client care and dealing with real kind of technical, complex queries. So yeah, really looking forward to this webinar today and co-hosting with Mark.
Thank you, Rebecca. So the basic format of the webinar is we'll first look at why payroll is so important to UK businesses nowadays. Then we'll look at some statistics that we went over at our breakfast event earlier in September for Payroll National Week. And then we'll look at the pitfalls individually. After each pitfall, there will be a summary for you as an employer to double check against your payroll and your records. But if you don't note everything down, don't worry, because we will distribute these slides after the call. And you can always email us any questions. We'll leave some time at the end for some questions as well. But if we don't get to it, then you can just email me or Rebecca and we'll get to it. Okay, so first, let's start.
Do we think we've got everyone here? We probably have, haven't we, at 12:32? We've probably got everyone in.
Yeah,
okay.
we should make a start.
Have it.
So first of all, why is it important to ensure payroll is accurate? So there's three parts to this, I would say. So the main part first is obviously the cost. So payroll is the highest cost of any UK business. And in the modern day, it is becoming increasingly difficult for employers to navigate it correctly. That's with the coming on of auto-enrolment, of processing benefits through payroll. There's a lot of legislation that's changed since the introduction of RTI. So payroll is becoming much more complex in the modern world. And to get it wrong as an employer, you're going to pay a lot of money to put it right, and to sustain it in the right way. So also there's the legal aspect of making sure payroll is accurate and your records are accurate and people are paid correctly. So payroll errors we have seen from clients, they can be devastating if they're not administered correctly, and if people in-house are administering payroll that they're not really qualified to do. Sometimes it lies with accounts. Someone in accounts will process the payroll for the company and they're not actually payroll trained. So we've seen errors in that way, the way they set the payroll up, the way they administer it, the way they look at pension. So that's another thing to look at. There's a lot of legislation through HMRC for payroll that needs to be administered and it needs to be adhered to, or the company can face severe fines. And obviously time is a massive factor. If you have an accurately run payroll, you don't have to worry about other things. You can just focus on your main core business. You don't need to spend a lot of time retrospectively correcting any errors. So it's much better to have an accurate payroll and focus on your own core business and your core services instead of worrying about this process and this function in-house. Anything you want to add, Rebecca?
No, I don't think so. I just think obviously the importance of getting this right. And like you said, you quite often have somebody in accounts that's running the payroll. They don't really know the software that they're using. Sometimes they're not keeping that software up to date. They're not, because it's not their main job. They're not keeping up to date with legislation. So 100 things will be going on in the background, but they know nothing about it. And then you don't spot the errors on that payroll until years later.
Yeah. And the CIPP is the Chartered Institute of Payroll Professionals, which is now a qualification for payroll professionals that all payrollers should hold in some form. And usually they're ACCA trained and they don't have the CIPP qualification. So yes, so it is a detriment to them when they run it in-house, when they're accounts trained mainly and not payroll orientated. Okay, so for National Payroll Week, which was back in the beginning of September, we had a breakfast event with Gravita, and we looked at some statistics about payroll, which is quite interesting. So we look at Employment Hero is a payroll bureau themselves. So they do a lot of national statistics in the UK through various events and questions, etc. And they reported that over 90% of UK businesses have admitted to making monthly payroll mistakes when they run it in-house, which is quite a large statistic, with 33% of them still managing the payroll in-house, mainly in some kind of function. Usually it's with HR or with accounts. It depends. It does change depending on the employer's choice. I've seen it in both situations. And a lot of clients are still manually importing their payroll data into the payroll system, which is a real worry because it opens up a lot of error rates. If you are entering things manually, you could enter the wrong employee number. You could enter an extra zero on someone's pay. I've seen it. You could, yeah. So without a proper variance check, you could really see some damage by doing things manually. And payroll software now, if you utilize it correctly, it is built for import functionality, much more than manual importing. So it's quite a large and worrying statistic that those still payrolls are doing manually.
Even just the time on that as well, the time to be sitting there manually inputting. I've seen clients that have come to us and they're manually keying in timesheets each week.
Mm-hmm.
And you just think, God, it must take you all month.
Oh, we do set it up, don't we? Import some clients overtype figures. That's leading through like VLOOKUP, and then they import the wrong data into the wrong employee and pay it to the wrong person. So having good Excel skills is a prerequisite now, really, for payroll administrators to know their VLOOKUPs, their formulas. So yeah, we just thought that's very interesting. Some statistics to look at. That's coming up at the moment in the UK.
Okay, so the top scary, isn't it? 90% is scary.
Yeah, it's 90. Mind you, they say they admit to mistakes, but it might just be like, oh, we might pay it the wrong day. Also, we just had a question. Any payrollers we would recommend for importing? Any providers? I mean, they all should have import functionality. I've not come across one that doesn't have it. So it's just making sure you understand, Thomas, just to understand how to link your file into the correct data fields into the payroll software. But there'll be a process for it. There'll be a webinar from the payroll provider. So they all have it. It just depends. Usually you just have a mapping tool. So you'll just map your columns in Excel to the payroll, and then you will just format it that way. So they all should have that. So our first pitfall is auto-enrolment. So where we see a lot of error, clients that process their own data, their own payrolls in-house, is with auto-enrolment. So what we see, I split this into 4 where we see the errors. So the errors we see is in the definition of pensionable pay. So what that means is what do you define as pensionable for your payroll, for your auto-enrolment scheme? And a lot of employers think that qualifying earnings is the only definition for auto-enrolment, which qualifying earnings is the banded earnings. So it's from anything from the lower earnings limit to the upper earnings limit is pensionable. That band is pensionable. So that's the auto-enrolment default. But under the pension regulator certification, there are also 3 other sets which employers can use and still be qualified under auto-enrolment to administer the pension. So those sets are basic pay, which is set 1, and that's a 9% minimum contribution between each years. Set 2, as long as 85% of your pay items go through payroll are pensionable, then that is a qualifying tier. 8% as a minimum, and set 3 is total pay. So there's a lot. If you make total pay pensionable through the payroll, you have to have at least 7% of E's and R's joint that's being made pensionable upon that total figure. So we've seen that errors with that setup. So we look at an employer's setup, they might be basic pay, but everything's pensionable, or they might be total pay and only basic pay is pensionable. So we see a lot of errors with the pensionable pay definitions and payments set up. Also with auto-enrolment, there are different tax bases for employees to receive tax relief when they have an auto-enrolment pension. So these 3 are relief at source, the net pay arrangement, and salary sacrifice. So net relief at source means that you get the tax relief from the pension provider. So you take off 20% through payroll. So you don't pay over 120%. You only do 80 through the payroll. And then when you upload your contribution to the pension provider will add another 20% to the employee's contribution. If you're a high rate taxpayer, you can submit through a self-assessment to receive the additional 20% or 25%, depending on what you pay as tax. So relief at source is that process. The net pay arrangement process through payroll means your pension contribution reduces taxable pay through payroll. So that means you get the saving through the payroll and through your net pay immediately. So it goes through the payroll straight into your net, and you'll see the saving that way that you get. So it doesn't go into your pension scheme. You pay over 100% contribution into the pension. And the other one is salary sacrifice, which is there is a HR contractual element to salary sacrifice. So it's a bit more in depth and difficult to navigate. But basically, it means you as an employee are giving up part of your remunerated salary in your contract to receive a non-cash benefit in return. And in this instance, that is a pension contribution. So salary sacrifice will reduce your taxable and nickable pay through payroll, and that amount that's reduced will be paid into your pension. So with this issue, we sometimes see employers set up the wrong definition of tax through payroll, and then with the pension provider, it's the other way around. So we might have the pension provider says it's relief at source, but the payroll says it's net pay arrangement. So that will mean that the employer is getting double tax relief when they process their employees' contributions. And we've had this one recently, haven't we, Rebecca?
It's one of the biggest mistakes I see when new clients come to us. Yeah. And then what's happened is their old accountant has gone away and set something up. The client doesn't necessarily understand the different thresholds and banding, so they don't really understand what's been set up for them. But it's the most common mistake I see with new clients. And
it's really costly to put right, because you have to identify where it went wrong and then take it from there to correct. And you would either correct it with the pension provider or through payroll, depending on which way round you've done it. And also with the salary sacrifice, there has to be a contractual element where the employee is actually agreeing to sacrifice that part of their salary for the pension. And we've seen a lot of employers who have not got that in place. They've not taken HR advice. They don't think also with salary sacrifice, there's the statutory leave element. So if someone is on maternity leave, for example, there's been case law that says the employer should pay the total contribution during the time of their leave until they return. So we've seen a lot of errors with that setup. Also, we've seen employers have a salary sacrifice through the payroll, but they're uploading the contributions separately as E's and R's, and then their pension provider is adding tax relief also to the E proportion of the contribution. So when you have a salary sacrifice pension, you should be uploading only the contributions as total R's. There should be no E element at all, because it is an employer contribution, really. So we see issues with that through clients. I've seen that one quite a bit.
It's really common and just so costly, because I mean, if you look back, if you have made that error and you're getting the tax relief at upload point as well, and you've gone back to go and fix that, you've got leavers on the payroll, you've got all of this other kind of stuff going on, and 9 times out of 10 employers that have made this mistake, have to put this or offer to put the shortfall in for the employees, because they're like, well, we can't ask them to pay that.
No.
And rightly so.
I mean,
So it's hugely costly.
and you will have leavers as well. How do
Yeah.
you deal with leavers?
Well, you can't, yeah.
We've seen it a lot. And also with the pension process, the employer should not be interfering with opt-outs. We've had clients say, oh, no one wants to be in the pension, so we don't need one. No, you have to have an auto-enrolment pension scheme in place. If people are due, they have to be assessed. If they are eligible job holders, they have to be enrolled. They have the right to opt out, but you have to follow the proper process deemed by the pension regulator, because you could face fines if you just determine. So the employer should not be involved in opt-outs at all. If an employee says, I don't want to be involved, you just, sorry, it has to be. It's a statutory requirement. As an employer, you'll have to opt out. You'll have an opt-out period. You'll be allowed to do that through the pension provider. And we've also seen employers miss re-enrollment, and minimum contribution levels have not been reached as well. We've seen with a certain few. So as a checklist just for auto-enrolment, you need to make sure you check your pensionable pay setup to make sure, remember, that's right. So is it basic pay, total pay? Is it qualifying earnings? So you can look for your payroll software. If you don't know, we can help you, or you can contact your payroll provider. They'll be able to show you in the system where this is set up. Check the tax bases. Remember, we said it's either one of the three: relief at source, pay arrangement, or salary sacrifice. So make sure the pension and the payroll matches the tax definition, because if not, that's where you're going to have an issue, and you'll have to make a retrospective adjustment. Check your salary sacrifice has been applied correctly. You can check that with your HR department. They will know about this, and they will be able to advise you better. And number 5, we said check your pension provider details match payroll setting. Anything else on that, Rebecca?
I think it's just worth noting as well some of the fines that can be issued by the pensions regulator for non-compliance or getting things wrong. So I have seen in really severe cases of fines of up to £10,000 a day issued. I think even for what you may think is a smaller thing, like missing re-enrollment and not doing it until 3 months later, I think the fines for that can be up to £400, can't they? So it's
immediate fines.
Yeah. So it's
they're infinite in reality, aren't they, from the pension regulator?
Yeah, and there's no they come down really hard on you, the pensions regulator.
Yeah, we've seen it. Sorry, Mark's just asked a question. With auto-enrolment for directors, Mark, it depends. Do they have a contract of employment or a services agreement with the employer? Because I think Mark's saying, do they need to be auto-enrolled or re-enrolled? They can be exempt from auto-enrolment for directors, but it's just check what is there. Do they have a contractual provision? Are they employees really of the firm? So that's what needs to be checked. So Pitfall 2 is benefits in kind. So for anyone who doesn't know what a benefit in kind is, it's something that the employer gives to employees that's not really remuneration. So it's not a salary payment. It's something like healthcare. It's something along the lines, just something they're benefiting from, like a car, like a company car that they can use privately, something that they benefit from that others don't. With benefits in kind, the revenue says employees have to pay tax on those values, and the employer has to pay national insurance. So with these benefits, we've seen issues with employers. They don't understand the differences between personal and business expenses. So business expenses are deemed wholly if they are in light of the business, and they're not subject to tax on national insurance. Personal expenses are. So that's the difference. And if you're unsure of what's the difference, you can check a site called the A to Z of benefits with HMRC, and it will list every single benefit within that A to Z, and it will tell you the correct tax treatment and the exemptions for anything that's exempt. So that's a good one. So what we mean is employers might pay employees' personal expenses, but that's subject to tax and NI through payroll, and they don't subject it. So they don't gross it up, or they don't subject it to tax or national insurance. So they're just paying them the full value of the personal expense. I've seen that quite a lot.
Yeah.
Also with benefits in kind, if they're still posted on the P11D, we see issues with the CEV is the cash equivalent value of the benefit. So how much is that benefit worth? Is the CEV. So we see issues with employers calculating that on cars, fuel, loans, and also you can now register to pay all your benefits through the payroll. And we've seen employers just payroll benefits through the payroll, but they haven't registered with the revenue to do that. And you have to register before the tax year starts that you want to payroll benefits. In April 2027, it will become mandatory for all employers to payroll benefits. But you can at the moment still payroll your benefit as long as you register what you want to payroll. And you can do that through your employer gateway account, or you can have your payroll agent for you. They'll probably charge you a fee to do that. But you need to register before the start of the tax year.
Do we know, Mark, if they're still going to ask people to register once it becomes mandatory?
I don't think so. I think it will just come. Again, they keep pushing it back because they pushed it back. Because it should have been April 26th, but they pushed it back to April 7th. So more information should come on that towards the end of the tax year.
We still have a couple of things that we can't payroll. So you can't payroll accommodation
and loans,
interest-free loans. Yeah,
but
everything else can go through the payroll.
Yes, and when it becomes mandatory through the payroll, there must be a provision for the P11DB to be submitted as well through payroll. So because at the moment you payroll benefits, you submit your P11DB for the total cash equivalent value for the Class 1A. So there must be a provision of that somewhere in the system if it hasn't already.
I think most softwares will.
I think,
yeah, they'll have to have it. So they'll. I think most softwares will introduce it if they don't have it yet.
Also, with salary sacrifice, there's something called OPRA, which is optional remuneration arrangements. So the revenue, I think it was in 2018, they came down upon employers who keep offering salary sacrifice for benefits to employees. So they might have gym membership or car parking or stuff like that, just lots of different types of salary sacrifice. So they made it mandatory to only allow a certain things as dispensation to be under salary sacrifice. And those are mainly pensions, cycle to work, childcare vouchers, if they're still in circulation. So anyone who joined it before the cutoff could still stay in the scheme. And also electric vehicles or low emission cars. And also annual leave. If you purchase annual leave, it can still be under salary sacrifice. So the revenue brought in OPRA to say if you salary sacrifice that's not under those dispensation agreements, you still have to submit that total cash equivalent value as a benefit on the P11D and pay tax and Class 1A national insurance. So that's something we've found employers do not know. So we see on payrolls all this salary sacrifice, and we will say, you can't salary sacrifice anything anymore. It's only for a limited amount of benefits. And so that's an issue we see. Also, a PAYE settlement agreement is a agreement with the revenue to settle the tax and NI liability for any benefits that are trivial that you give employees. And we've come across situations where employers haven't got one in place, but they have trivial benefits that they give employees. So it's just to be more aware of benefits in kind, what they are, and how they should be treated correctly. So as I said, we said the reference for HMRC, you can use the age set of benefits. You can just go on Google, put age set of benefits, it will bring it up, and it's just a list of any benefit. Check that the business has identified the benefits correctly. So are they personal? Are they business expenses? Are they under OPRA? Are they under salary sacrifice? Are they being treated correctly on P11D? Are they being payrolled? And you've registered to payroll the benefit. Check all benefit in kinds have been categorized correctly. That we just said. Check the OPRA ruling is not applicable. We can circulate the OPRA ruling after the call as well from the CIPP. Check all made good amounts have been deducted net. So this is one we see an issue with. So when someone pays toward the cost of their benefit, that amount they pay towards it should reduce the total cost of the benefit. So they shouldn't pay tax on that proportion. It should be reduced. So they only pay on the reduced amount on their P11D. So we have seen issues where net deductions are going through payroll, but they're not being submitted on the P11D and therefore not reducing the total cash equivalent value of the benefit.
I think I've seen quite a lot on medical
Yeah.
So you will get employers.
Family cover.
Yeah, so they will have family cover, but they won't cover the cost of your family members.
Yeah. They just
Um,
cover single premium. So you have to pay the difference, which you do as a net deduction. But that has to be offset on the PMD so that the employee doesn't pay the full family premium because they're paying towards it.
I see that all the time. And also I quite often see the error on payroll whereby you're payrolling your medical or whatever benefit it is. And then your scheme will come up for renewal and you're not adjusting those values through payroll mid-year. You're just continuing, and then you kind of get in a bit of a mess at the end of the year. You really need to be doing a bit of housekeeping on those benefits as the year goes on.
Yes. And also if you payroll benefits, you just need to make sure that you've made the notional pay correctly. So that means you're only adding it to taxable pay to generate the tax due. And it's not actually a payment to the employee. It comes back off. So you just need to make sure that's set up right through payroll, because you don't want to be paying people the cash equivalent value. You just want it to go on the pay slip to generate the tax, which is why you payroll benefits. So so employees pay tax in real time and not on a PLMD and reduce their tax after the tax year.
But I think also as well, when you start payrolling benefits, you also need to be able to explain how that works to your employee.
Yes,
because I
it's
know
very important.
the second that pay slip hits and they see something going in and then the same amount coming out, it just completely confuses them.
It will do in the first year they set up payrolling benefits from April, because the revenue always, they guess the adjusted tax code for your P11Ds. And they don't need to do that when you start payrolling benefits. So the first year is a bit tricky when you register and you payroll benefits. The third pitfall that we see quite a lot more recently is the IR35 ruling and off-payroll worker. So I know some of the audience, they've asked me questions about this specifically because there's a lot of naming and shaming of employers going on this category. So what this means is when an employer engages like a subcontractor or someone who's self-employed, they need to actually check that they are self-employed for tax reasons. And to do that, they need to make an assessment using HMRC's tool called the CEST, or the Check Employment Status for Tax. So it's like an assessment of the individual. It will go through a set of questions to then give you a calculated answer as to, is this person an employee or are they actually self-employed? And the result of the CEST test, you as an employer must abide by. In case HMRC ever come knocking on the door, you need to be able to prove you treated that person correctly. So we have seen I've seen a lot of situations recently working with the tax team where they find this quite a bit, and the client's got no clue. The employer's got no clue. The IR35 ruling needs to be looked at when they do this. And so an SDS is a status determination statement. So once you've made your determination using the CEST test, you have to issue one of these to the individual to say, we've done an assessment on you. This is your status for tax. We must abide by this ruling of the revenue. And if they are to be deemed an employee, you have to put them on payroll as an off-payroll worker, and they'll be subject to PAYE through the payroll. So we do see this issue where it's not picked up by a lot of clients that they might have this issue within the in-house that they need to look at. So again, they might look at an employee and say they're self-employed when they are really an employee. The revenue will look at the relationship between the two of you, who supplies the goods or who supplies the materials for them to do their job, or where do they work? And there's lots and lots of different factors and questions that come into the assessment. And also you need to, if you have a determination, you need to then make sure you have the correct contract in place with the individual through your HR department. And I've also seen where employers have given benefits to self-employed people, which the revenue would look at and be like, well, they're obviously an employee. Why are you paying them healthcare when they're self-employed? You don't need to be doing that. So there's just a real issue around this one, that you really need to know your knowledge on the subject, or get assistance our tax team or through us, because usually we work with the tax team for this. because it might go across borders. Sometimes it comes into employees working abroad as well, which is a very difficult situation, because you have to look at how long the individual works in the country, how long they work abroad, where is their tax residency status, where do they pay tax on their worldwide income, is there a double or reciprocal agreement in place for tax and for social security. So all of that needs to be looked at when you look at foreign workers, or when you engage with subcontractors, or when you engage with self-employed workers. You need to just make sure you know their status for tax in the UK. So that's just a big one. Also, we've seen pension has been applied to off-payroll workers, which it doesn't have to be applicable because they're not actually employees; they're just employees for tax going through the payroll. Have you seen this? Have you seen this a lot, Rebecca?
Yeah, so I recently attended a kind of random audit, HMRC audit, and everything was going really well until we hit IR35. And they had just been literally taking the contractors or employees, word that they were self-employed, hadn't been testing any of them, hadn't been. Yeah.
Did they then do assessments?
They apparently had done a few, but they didn't have any record of it. So yeah, this is where it really fell down for them.
Yeah.
They're really hot on this. Yeah.
They are at the moment. So the checklist for IR35 is check if any IR35 rules are applicable to any of your workers. If you have an employment contract with an employee, then that's fine. They're an employee. You put them on the payroll. That's fine. It's those situations where someone is maybe submitting you an invoice for their services that you're paying, or they're coming to you from a third party agency, etc. It's the end client is yourself that is responsible for doing the assessment for IR35. So it's just to make sure you know their status for tax. So you could just go onto Google and put in assess test or SDS, and it will bring up an explanation. Or you can email us if you need additional assistance. So yeah, for foreign workers, that's a very, as I said, it's a very niche situation. I get a lot of questions like, oh, do they need to pay tax in the UK because they work here, they work there, and you can't just answer yes or no. You have to have a real assessment of their situation. Do they own property in the UK? Are they a UK national? How long do they work in the UK? How long do they live? You know, if it's an easier situation if it's a non-UK resident, a non-UK national who works for a UK company and never comes to the UK, then that's an easier situation. But yeah, those are quite difficult situations which you will need help with, tax advice with. So just ensure if you make any assess tests, you issue an SDS, you can get templates online to do that. So that's the status determination status to the individual, which says, we have assessed you for IR35. This is the status. We must abide by this. And yet, again, seek tax advice. We can help you here in Payroll. We will work with our tax team to be able to assist you if you have any special situations with any employees who want to work abroad or they do work abroad and you've not looked at it.
And I guess it's just remembering that as an employer, this is your responsibility.
Yes, it's your responsibility. Yeah.
Yeah.
So you cannot ignore it. Do not ignore it. Okay, I'm going to hand over to Rebecca to go this one.
Okay, and we'll just have a quick look now. Pitfall number 4, just some of the general processing errors that are made when running your payroll. So whilst they may seem like small details on the payroll, things like back pay, salary calculations, pro rata calculations, things like that, they can easily be missed, but they make a big difference to accuracy and compliance on your payroll. And if they are missed and they're spotted kind of 2 years down the line, they become more and more difficult to fix. So some of the other things we've got here are share payments. So you need to be checking how share payments should be calculated on the payroll. So just taking that extra bit of time to just check how things should be taxed. Are they subject to NI? Also looking at any kind of leaving payments, so settlement agreements, redundancy payments, things like that. Also looking at how national insurance should be handled for any new starters on your payroll. So another one that we see that's catching employers out at the moment is holiday pay. So if you've got any 0-hour workers or part-time workers on your payroll, you need to ensure that if they are regularly working overtime and being paid commission, bonuses, things like that, you need to be including that in their holiday pay calculations. And we find that a lot of employers aren't doing that. Also, when it comes to kind of payroll knowledge and system knowledge, I know we touched briefly on that earlier, but if things like tax codes, things like that, if you do not understand how a tax code works and you're just kind of happily clicking through the process each month, you won't know when something's gone wrong. I do understand that tax code issues tend to sit with the employee and they need to sort them out directly with HMRC, but just being able to spot when something doesn't quite look right. Also creating duplicate employee records, that happens a lot. And I've seen that when people are changing payroll provider, trying to correct mistakes in earlier years. So you end up duplicating an employee's record via their reference or something like that. It can take forever to fix this. Sometimes it leaves you in a situation where you have to set up a disputed case with HMRC. I am currently working on a disputed case that's been going on for 7 years now. It's not a complex case. It's just how long HMRC take to deal with things like this. And sometimes you get to a point with errors where you cannot physically correct them. You have to leave that down to HMRC to correct. So it's not worth even getting into this situation. So I just think to avoid some of these pitfalls, hold on, let's just have a look at some of the other general. So yeah, ineffective payroll software. So I mentioned this earlier. So sometimes you're using, or sometimes people may be using in-house payroll software that they've not kept up to date. They're not downloading current legislation, things like that. So obviously the calculations that are going on in the background will be incorrect. Late payment of PAYE, late payment of P11D, there are penalties for all of these kind of things. And it's just about knowing what these deadlines are, making sure that you're ready, you've got all this information ready. Another thing that we see are import errors. So we discussed earlier about manually keying in payroll, and obviously it's better to import things, but also you need to be kind of checking that payroll. You need to know what to check for and where things go wrong, to be able to know that you've got it right. So if we look at some of the things that we need to keep in mind when, Mark, can you just go to the next slide, please? So some of the things that you need to keep in mind, the list is very long, but these are just some of the things you need to keep in mind. So checking that all pay components and deductions are set up correctly. This is quite often where the problem starts. So if these pay components aren't set up correctly, they're either not meant to be subject to pension or however they're supposed to be. This is where the problem will start. And then you'll continue using these pay components for years to come and can create all kinds of problems. Checking that any tax year adjustments have been treated correctly. Ensuring that holiday pay calculations are being applied. It's worth reviewing your holiday pay setup regularly. So especially, like I said, if staff are earning, if they're 0 hour and they're earning commissions or bonuses and anything like that, don't just check it at the beginning. You need to be regularly checking these things. And it's just about taking that extra bit of time each month when you run a payroll, because it can save a lot of time and stress. Just checking that you've triple checked somebody's redundancy calculation, you've triple checked whether they've had all their final payments, just things like this, which will save you a lot of stress in the long run. Okay, can we go to the last?
I would just add to that, Rebecca, that when you said about the biggest thing that makes me not sleep at night with migration work is the doubling of the employee records with HMRC. So if you move payroll software, we like Rebecca's dealing with one and we're dealing with another one where a client's previous payroll administrator is a new setup, so that I don't think they're versed very well in payroll. and they gave everybody new employee numbers when they moved them from one system to the other. This duplicated all of the record with the revenue. Then they were hunted down by the revenue. They were visited by the revenue on their doorstep for the total PAYE that was due. And it just becomes an absolute nightmare because the revenue won't listen until you correct it. And the only way to correct it is through a dispute with the revenue, which then takes a long, long time to set up. It's a no-win situation. So we in payroll work really carefully to make sure that that does not happen. So if you are going to move payroll software in-house, I would recommend you do it in April. You do not do it mid-year if you're not well versed with what you're doing, because you could cause a catastrophe that it would be difficult to correct.
And also, it's worth mentioning that if you are running an in-house payroll, you probably sit with that workforce, and they will all start getting letters about how they owe thousands of pounds worth of tax, and that's not a nice situation to be in.
No, we've had that as well.
Yeah, it's really not a nice situation to be in.
No. So from our main pitfalls, we look at the consequences of, not running and administering your payroll and pensions correctly. So you could, if HMRC sees something strange with your RTI returns, which is what you send through your payroll to the revenue to tell them, what you're deducting from, what your deductions are, what you're paying over, that may trigger an HMRC audit. That means the revenue will then visit your premises and they will look at everything, all kind of taxes, corporation tax, everything. They will just do a whole audit. So best way to avoid a HMRC audit is to just make sure your PAYE is correct and your RTI is correct. As Rebecca said, financial penalties are the interest. You will receive interest for late payment from HMRC for your RTI. So you need to make sure that's paid to them by the 22nd of the next tax month. If you go beyond that date, you will receive late penalties. Also, if you do any, they're called employer year-end updates, that also will apply interest because you have been late on the record. And sometimes that's hard to look at and reconcile on your online account. So it's just to be aware of the financial penalties that you can incur. The TPR will issue a £400 penalty immediately if you miss your re-enrollment date. And I think we've only had one overturned, haven't we, when we've looked to dispute it. So it's quite difficult.
Rarely accept appeals.
Yeah, they rarely accept any kind of appeal. So avoiding that is if you don't know what your re-enrollment date is, you can look on their website with your PAYE number and your accounts office reference number. So you'll be able to find where your window of re-enrollment is. So you make sure you don't miss. You should get a letter anyway. So the letter will come to the registered office address or the address that you're registered with TPR, and it will just have your date in that you need to abide by for your re-enrollment. There's a lot of other financial penalties as well that can come from various.
There are. They're here, there, and everywhere. I think when the revenue can get money out of you, they will.
The revenue will also take funds from other accounts. If you have a credit in your PAYE, they might use that to offset something else. So that's another thing I've seen where the client thought the money was in the account to pay the PAYE, and then the credit disappeared because the revenue will use money that's shared across your accounts.
The power that they have is crazy. I've seen a case recently whereby there was a disputed case for money that the client didn't actually owe, but the revenue were actually able to freeze the client's bank accounts.
Mm-hmm.
So the power that they have just for not being compliant or just not getting things right initially is crazy.
Yeah. Also now GDPR security breaches they're so easy to do on accident, and then you have to go through a whole process of reporting it and making sure that you abide by the correction, etc. So if you're looking for payroll software, you want to make sure it has a portal, an exchange portal. You only put if you have clients who you give payroll services to, you want to make sure you can find a product that has a portal, a secure portal, or you have an in-house secure portal that you communicate with clients or employees or whatever, just to make sure you do not use email to exchange financial data or individual employee data. It's because it's quite dangerous. It's so easy to put someone's name when you might be dealing with 3 or 4 Carolines or Helens or whatever, because it's been done. It's very easy to do. As we spoke, as quite a few of the pitfalls is the legacy backdating issue. So when you find an issue with your payroll, it opens a can of worms because you're going to have to go back and see how far that issue has affected the payroll. Then you're going to have to correct it. And as Rebecca said, that could be you as the employer are liable for the cost of the tax you didn't deduct or the national insurance you didn't deduct against the employee. And you'll have a situation with lots of levers, which is hard to reconcile because you could write to them for overpayments, but it's very difficult to get that back from a lever once they've left the company. Also pension's a big legacy issue. I mean, when we migrate to new software, you'll usually find the main issues with pension setup, and finding those is very difficult to correct. Also, making any issues on your payroll or errors with people's pay is you're just going to lose confidence with your workforce, and that's real damaging for your business. And it's not something you just want to avoid. So if payroll is costing you a lot of money, it's causing you a massive headache, it may be better to look at outsourcing the work to someone who's professional, who will have a professional service for you. So you don't have to worry about that. And also increase costs in-house. So if you administer payroll in-house, you've got to pay for the payroll software. You have to pay for someone's salary to do that. You then need training quite rigorously and often because a lot of things come up over the tax years. We have training at the end of every tax year for all differences, and we're all CRPP qualified by the Chartered Institute of Payroll Professionals. So there's a lot of cost to maintain payroll. Also, you don't have cover in-house for sickness or holidays and things like that, which can cause a lot of issues if you leave it in-house with accounts, etc. Anything you think, Rebecca? Anything else that might be valuable?
I do think you are seeing more people now outsourcing payroll, just because it's become overly complex. It's one of those things that you need to get right. It's one of those things you can't just you can't get it wrong. I mean, it not only protects your staff, but it protects your business. So you can't have people not knowing anything about processing payroll, basically.
Well, there's always that old saying, isn't there? Like payroll's a push of a button, that directors will say. And it makes us quite annoyed in the payroll world because you never get thanked for payroll. It's a thankless job. You don't want to hear from, if you don't hear from people on payday, that's brilliant because you've done your job well, and everything's correct. But yeah, it's definitely something that needs to be correct. And people need to be confident doing it as well. Because a lot of people bring the work to us because they say we're just not confident in what we're doing anymore. And we can do like a POA audit to see if they've made any errors recently, etc. Looking back up to 6 tax years. So it's just these are there can be more, but these are the main consequences and penalties. So how we can help clients is we have the full service for payroll administration. We have different tiers depending on what you need. So we have an essential tier, which is just RTI submission, really just processing a payroll for you. Doesn't include auto-enrolment, doesn't include benefits, doesn't include payments or nothing. We have a professional tier, which most of our clients take, which includes any benefits in kind. And Apron is our payment solution. So we will pay net salaries and we will pay the revenues PAYE over for you. So you really don't have to worry about payroll. And that also includes implementations. So a lot of our clients, when they come on board, they don't understand where the data is that they need to give us for their year-to-dates to be migrated. And we take that pain away from them. So we will contact their previous accountant for the data, or we will gain access to their payroll system. If they use Xero, we can get in or Sage, etc. We know what we're looking for. We don't need to include you. We can go around and give you that peace of mind that you don't need to be involved with the migration. It all gets done for you. And then we have our top tip, which is basically if you need to rerun the payroll after it's been authorized, we wouldn't charge you. payroll consultancy. So if you ever have any strange situations like the people living abroad, we wouldn't charge you any additional fees for that. That would all be included. Any POI reconciliation that you might need. So you might come to us and your online account's in a mess. It needs to be reconciled. We've had that quite a bit. That would be included. And just to give you an annual health check with your POI to make sure there's nothing wrong, we would assess it at the tax year end. So those are three. The costs of that we would go through with an individual assessment because it depends on your headcount of your payroll and your tax periods. So is it weekly, monthly, annually, etc. Okay, I think I've done a good bit of talking. So we've got 10 minutes for some questions. If we can go through, I think there's some already pending. So Alfred asks a question on auto-enrolment. Does the employee have to opt out through the pension scheme instead of writing to yes? So the employee needs to deal with the pension provider directly. So when your payroll software assesses them and enrolls them, you will then upload that person to the pension provider with their contributions. The pension provider will generate a starter pack, and in the starter pack, it will be a letter which says you've been auto-enrolled. You have until this date to opt out. It's your right to opt out of auto-enrolment. And there's usually a way they'll write in there how to do that. And it's not through the employer, it's through the pension provider. It should be through the pension provider. We deal mainly with Nest and Peoples, and it's just to contact them back to opt out.
I think if the employer is just taken out of that kind of decision making, the relationship is directly between the employee and the pension provider.
Yeah, because the government don't want you to be influencing people not going to auto-enrolment, basically, because they don't want to pay pension when they retire. So they're trying to reduce the cost on the revenue.
I actually remember we had, I remember a client many moons ago, when everyone's first started staging, and she offered to pay employees a bonus for opting out. And she actually told us about it.
Really?
Yeah, this was about 8-9 years ago when everybody started this kind of staging. But yeah, it's amazing what some employers will do to get out of paying their part.
Yeah, they will. Or they'll ask us to get them out of it, which we can do our best, but sometimes it's unavoidable, the corrections you have to make. So Peter's asked, do we provide a managed payroll? Yeah, so as I said, Peter, we just went through our end page of our brochure. So we offer a full managed payroll service. So that will be payroll start to finish, auto-enrolment start to finish, issuing comms to employees when they're auto-enrolled or when their status changes. We will upload your pension contribution to the pension provider. And depending on what tier you want, we do your redeclaration of compliance as well when that comes around. So yeah, we offer the full shebang. And it's one cost, there's one fee, there's no hidden fees. So Alison has asked a question. So Alison, you can email me just after this, and we can set up a call for you to go through if you're looking to outsource your payroll. So it's mark.taylor@gravita.com or rebecca.aimey@gravita.com. So either one of us will be able to help you. With every new client, we'll set up an individual consultation for you to go through your needs. And then give you a bespoke quotation, and then take it from there if you wanted to come over. Sorry, I'm just reading the questions. There's quite a few.
I know, I can't see them on my screen. I think they will just come through on your screen.
Yeah, so Jennifer said, what happens if an employee leaves the organisation and then later they do some consultancy work for the old employer? They give them an invoice. So do I need to go through assess test? So yeah, because how is that person saying they're self-employed? You're looking at trying to define, are they really self-employed? And you can do assess test to determine that. If you think that you're not sure, then yeah. So it's basically, do they have a contract of employment with an employer? Do they have a strange setup with you, where you're providing their materials to work, or you give them a space to work in? If you are unsure, you can just do assess test to determine it. But again, if you need help, you can email one of us. So Mark has said, what happens when benefits in kind are only identified in doing tax year ends, which we see that all the time, when we have to payroll benefits. So we've seen this where they don't have a PAYE scheme. So they don't have employees, but they have some benefits for directors that might need to go on a P11D. Have you seen that situation?
Yeah. And it always comes up at the tax year end. Nobody's thought about it throughout the year.
Yeah. So we see that situation a lot. And we can help you if you need to apply for a PAYE scheme. You need a PAYE scheme to submit P11Ds. You have to have a PAYE reference to be able to do it. So that's something that we can assist in.
And I guess you'll need that in 2027 anyway to put them through the payroll.
Sorry, I'm just looking at this.
That's okay.
So Lorette has asked, if an employee wants to increase the percentage of pension, I believe, do we just change this on the software and pay Nest the correct increased amount? This has no effect on what the employer pays, as they pay 3% only. Yeah, so usually employers will have a policy to say we will pay or we will match up to this percent of a contribution. So that might be 5 and 5 or 10 and 10. It just depends how generous you are. Or you might only stick to the minimum of auto-enrolment, which is your right as an employer. So if an employee wants to go above that, that's absolutely fine. You would just change the percentage on your payroll record. Do not enter a value. Keep it as a percentage, because if you enter a value, it will never change on the system. So if they get a pay increase, etc., that will not be taken into account. The value is static; it won't change. So just make sure you use your percentages, not values, really, for contributions. And then when you do that and run it through the payroll, your payroll will issue a Nest form. It will issue a Nest upload, which you can upload to Nest, or you can do it manually with Nest. It doesn't matter which other one you can do. Barbara said, why can we not payroll the accommodator? Good question, Barbara, because the revenue haven't got it sorted. So accommodation for a benefit in kind is complex. It's more complex to determine the cash equivalent value. So I think the revenue are not confident that payroll providers can, I think they won't be able to set up that kind of assessment through pay. It might come at a later date. Loans and, well, cars can be done, and cars are quite in depth when they go through payroll as being submitted for payrolling of benefits.
I think it took software providers years, though, to build that into softwares, didn't it?
Yeah.
Our element of it. So
I don't think it's a no. I just think as when it first comes on board, to our knowledge, those are still not going to be able to be facilitated, which means you're going to have to do a P11D for those. So the revenue is going to have to make some provision for that come April 2027, which we're not aware of at this time. They haven't asked to my knowledge so far. But that will come out. Sorry, I'm not understanding your further question, Barbara. If you email me, you can email me separately on the question. So we have an anonymous question. So the last one we'll go through. As the opt-out period is 30 days, do you still need to pay employee-employer pension within that month and then get the refund? Yes, the following month. Yeah, so you can't hold. Some pension providers will not accept your contribution for starters or new enrollment, those that are enrolled, until after the opt-out period has ended, because they don't want to refund it. So we usually see that with Hargreaves Lansdown. I think, is it Aegon?
Aegon, yeah.
Aegon.
I've seen it with Aegon, yeah.
Yeah, so what you would need, I don't know who sent this, but you would need to just upload their contribution. If they do opt out, as you say, you point them to the pension provider, they'll get a letter, they'll get their welcome pack from the pension provider. Once they opt out, the pension provider will just refund the contributions back through your bank, and then you need to refund that through the payroll to the individual. So they will do it all that way. It's
really important that you follow the process as well, because I have seen some employers we'll say, oh, it's okay. Well, we just won't put you in, and we'll just say that you've opted out,
No, yeah. No.
It's really important that you follow the process, and that everything is correct.
Yes. Okay, well, I think that's right on time, everybody. So thank you so much for joining us. There were a few questions that we didn't get to, but I know that David will circulate the slides after the call. And if anyone needs any help, anyone wants a quotation for our service, then please feel free to give me an email or Rebecca. And as I say, we'll set up an individual consultation for you and take it from there.
Thank you so much, everyone.